Good afternoon, everyone. Today's Monday. It's September the 17th, and this is our Lunch and Learn. You know, I used to do a lot of these years ago, and I just got out of the habit of it. And so I thought we'd get started again and have some fun and learn about some technical things. I do want to tell you that I will be teaching this stuff in depth at the Traders Expo in Las Vegas. That's November the 12th through 14th of this year. And what we've really been able to do on a couple of platforms actually is automate our trading strategies, and one of them particularly is with MetaStock, and we will be unveiling that product in Torrance, California on October the 13th and 14th. So we've been working for a couple of years on automating this stuff, and so I am really excited to get it to everybody, and I'm really looking forward to the next two events. If you're able to make it, please do. Would love to be able to meet with you personally, talk to you about stuff, and certainly help you see how these automated spaces are the way to really help you put guardrails around your work. All right, with that said, let's hop right into the space. I am using Motive Wave today. That is my favorite charting software, although I do use Thinkorswim quite a bit as well. We're going to be popping in back and forth so that you can see how to use a number of these things, because certainly many folks do use Thinkorswim, and it is something that it's a good platform. I just happen to like Motive Wave a bit better. So one of the reasons that we come to lunch and learns like this, or hey, you know, I want to learn about how to be effective. Just before this webinar started, I got an email, and the question was, hey, you know, a long time ago you said, you know, if this is trending up above a certain space, it shows pretty solid momentum, we should stay in the trade. We could be in a prolonged uptrend. Now, we really haven't been. We've been in a prolonged uptrend if we take a look at a big picture. Like if I want to take a look here at, you know what, let's open up a new chart and let's take a look at the SPX. And oops, that's not going to give us the SPX. So let's take a look at the index and see what they've got it. Nope, that's not it. Let's see if that'll give us one. Interesting. Not giving me any of my indices today. That's a very interesting event here. So let's go down here and figure this out. Oh, it's because I don't have a symbol on the edge there. That's my problem. Aha! So if we take a look at something like the SPX, we can see that this is a weekly chart. We've had a prolonged motion. And let me put this into the right template because we are looking at just the SMI. I'm going to talk to you about that in a couple of different ways. But this is TD Ameritrade is feeding this information in here. And this is a weekly chart of the SPX, which you'll notice for the last 1, 2, 3, and this week, we really have been sitting in the same place. And overall, everything else has been sort of grinding upward. And so when we take a look at a chart, and it's got these motions sitting in here for us, we have these motions sitting in here for us that allow us to see the highs and lows of the week, and that's pretty important. So the big things that I want to go over, because I want to answer questions and I want to be able to pick your stocks that you might want to look at and say, hey, what do you think about what we're doing here in the space? Then you'll be able to see how you can use the technology to move yourself into the spaces that you want to go into. So what I have here are the weekly highs and lows moving across the space. So the question that I got was, hey, where would I know to get out? And so that's really one of the toughest questions. The next question that's pretty difficult is, well, where do I get in knowing what I need to know in terms of managing my risk? And so that is something that we really do want to think about from a trading perspective. So what I want to share with you is how to look at the SMI, and then if you're looking at a particular chart, what might you want to do with the SMI in terms of figuring out what kind of trade you want. So the first thing I'm going to do is expand this so we're only looking at one thing. And you know what? We will look at something very simplistic like the Qs, right? Those guys are fairly easy. That's an alert signal that we have here for the Qs, but we're going to look at what the Qs have been doing. You know, a lot of folks really say, hey, you know, could you tell me about what's the best moving average to use? What do you use? And here's the thing about moving averages. Moving averages really aren't the be-all, end-all of things. What they do tell us is the overall motion that a chart is sitting in. All right? And so when we look at the overall motion of what a chart is in, it's going to tell us either it's moving upward, or it's moving downward, or it's moving sideways. So here's what we have a tendency to do. We have a tendency to look at a chart in its entirety and go, oh, it's moving upward, and so I just need to think about upward motion in general. The trend over here is not going to be as important as what you're looking at here, and what it really does boil down to, when you first come to a chart, the first thing that you want to do is draw a line that says, this is where support became resistance or resistance became support. And sometimes that's the exact same number. Here, this line in the sand is resistance. It moves down here. You could say, well, why wasn't it this line? And you could say that as well. So if we put a range of motion and we say, all right, I have support here that is resistance, that turns back into resistance and then all of a sudden becomes support. These are very important levels. It turns out that there are several levels like that as we get closer to where we're sitting in time at this particular juncture. These arrows just tell me that I am looking for a support event. They're not telling me to trade short. They're just saying, hey, you've hit a resistance zone, and so now you want to look for a support event. And so 3 days ago, that's what this chart told me, and so I'm going to look for my front line of support. It's going to be sitting right here in this space. So these highs and lows give us the number one thing that we should be looking at in terms of how do I establish my trend, right? Taking trades off of a moving average or anything like that, they're fine. No problem with that. At the end of the day, the only thing that's going to tell you whether you hold a formation is how well it holds after it comes into the level and moves forward. So let's talk about the SMI. The SMI is the Stochastic Momentum Index, and I have two of them drawn here, right? The first one I have is this one. If you have Motive Wave, which I highly recommend, if you have and no, I don't get anything from Motive Wave for telling you to go get them. Just, it's an excellent charting platform. For me, I've got something very simple here. I use the simple moving average. I have a high and low period of 10, a moving average of 20. I've smoothened the chart out, and then I have a signal period of 9. Now let me show you what smoothing does to a chart. This is the white line that we're looking at, and so if I move this to a 1, and watch out, I still have my alerts going. Sorry. Oh, I need to turn those alerts off while we're studying here together. If I am looking at something like that, you'll see how the line gets very choppy. Is it up? Is it down? And a lot of times we really don't need to be concerned about that sort of thing. So smoothing the chart out, okay, this is great. Smoothing the chart out will tell us, how about if I leave that there, will give us an easier time of saying, hey, listen, this is what I am looking at. I am looking at something that is predominantly moving into support or predominantly moving into resistance as a chart. So here's what I have. I have this number, 45 and negative 45. Now, this is arbitrary. I know we don't want to hear that, but it is. It is an arbitrary number. Could that number be 25? Yes, it could. Could this number down here be negative 25? Yes, it could. It is not about a precise number, and the reason that it isn't is because there are hundreds of thousands of us participating in the market at any one period of time in all sorts of forms, whether we are part-time investors or full-time traders or whatever it is. And there are ranges of motion that are associated with our charts. And so when we look at something like that, it's never that line. It's always a range. And so when you look at something like this and you see this SMI moving down, it's telling you, listen, I'm above my zero line, which is sitting right here. If I'm above my zero line and I'm moving down, I'm trying to find support. Now this 10, 20, 4, 9 reading is a very gently sloping formation that is not really following what my candlesticks are doing, right? It is actually following the overall motion of the chart. It says over time, as this moves up here, I am likely heading into higher resistance. And so if this slow SMI is moving upward, what I'm looking at is a generally bullish chart. So if I were to take away all of the bars that are sitting here, and I said, okay, I don't want to see any bars at all. This is driving me insane. If I don't want to look at any bars, I can still tell from this slow SMI what my chart is likely doing. I can really also tell that from my moving averages, right? My moving averages are generally up. That means I'm moving up. What we have to do as traders is simplify the way that we look at charts so that we can understand what to do. What we have a tendency to do is look at too much. And that too much, because we think more is usually better, too much ends up not making us capable of doing a very good job with making decisions, because we just aren't able to do that very well. That's just the way that is. Sorry about that, but the more choices we have, the harder things are to make decisions. So here we are at this base. Now, if we take a look at this one, this is a much faster SMI. And so let's take a look at this one. Same simple moving average, but my high-low period is a 3. My moving average is an 8. My smooth is a 4, again, because I don't want it to be very noisy. See, I could make that, let's look down here. Do you see this right here? If I look at, and I make this a 6, what you're going to see is all of the signals sort of disappear, up marker, down marker, and that's perfectly fine. If you smooth something out, it has a cross point that just moves a little bit more to the right. You catch it a little bit later than if you had it sitting at 4 and you said, all right, I know when things are messy, and when they're messy, I know I don't need to take this trade. So one of the first things I want to talk to you about, when you look at an SMI and you have it like this, if you see your up arrow and your down arrow, because you've got it crossed, right? What I have here, I haven't shown this to you, so let me do this one more time. You're going to see that my signal line is not present. If I put it on, and let me give it a dash. That's going to be easier to differentiate. If I put it on here, you're going to see that, yeah, Fred needs to turn that alert off. She does. You can see this line here crossing over. That's what those arrows are for. So I don't have that line there because I'm not really interested in a cross. What I'm interested is in the inflection event, rolling over. And so when I make the chart smoother, it tends to give me a push forward of where it is I'm actually going. So here are the big things that you need to learn. One, with the SMI, if you get a cross from very high levels, all it's telling you is that it's moving into a support action event. If your moving average is up, like this, in this space, you can see it's very steep, when we get this cross, it just tells us, listen, I need to look for support. And because we are sitting with a weekly chart here, you can see that right here, with this downward cross event, we can see that we actually have a support zone. So this crossover is not telling us to get short at all. This is the number one thing that I see people doing when they're newer traders and they see the crossover line and they say to themselves, oh, my chart's rolling over. That's not what it's saying at all. Particularly if you have a moving average that is very steep. Now you're going to see something else here. Here's something else people say. Hey, listen, we have technical divergence. That means that this is high and this is low when this is high and this is higher. The point that this occurs and the point that this occurs is not the same. These two arrows do not correspond to the same study. And so I probably need to delete that right now from that space. But what we do want to do is add our overlay for the SMI. And we're going to give it the 3, the 8, 4, and what did I have? 3 there? I don't even remember. Yeah, that's about right. Oopsie, hang on. We wanted to do this as well, and we're going to use just this marker. All right, so we'll use our up and down, which is very nice for this. You just can't look at things and go, okay, that's telling me to go short. It would be really nice if our charts did that sort of thing and we knew exactly what to do in the space, but it's much more complex than that. That's why it takes a long time to build algorithms and why it is that I've been working on these algorithms for years and they are just coming into the fore. So when we have this space, it tells us I'm looking for support. When we see technical divergence, people say, oh, you know what? This is where it's going to roll over because this is moving down and these are moving up and that means my chart is rolling over. No, it does not. What it means is if it rolls again, it tells you I might lose my first edge of support, which is sitting right here, and I move instead to my second edge of support, which is sitting right there. That's what these things are telling us. So when we look at this downward motion and we say, wow, how do I use that space? One, you have to think about what is the overall motion in the chart? And that's what a moving average gives you. It tells you relative trend. And so once you have the trend, or many folks use a trend line, but then what you don't want to do is get so consumed by your chart breaking your trend line that you go, okay, I got to get out of this trade, right? The moving average says, hey, I'm going to wiggle around with the rest of everything. But if you don't see me losing support and then bouncing back into that same support and have it turn into resistance, I am still moving up. And so when you look at your SMIs and you see it trading, one of the biggest things to look for is, am I sitting above 0? And if I just lost my 0, as this one did down here, we can pull this up a little bit and show that. If it's sitting right here, and I just lost my 0 line, which is sitting right up there, the question is, if I'm watching this come down and I realize it's bullish, what is the chart actually telling me to do? And it's telling me, listen, you can look at this and you can say, I see what the chart is doing. It's telling me it's moving to support, so I better measure support. And if I'm trading in the overall direction of trend, I must start on my weekly charts and watch for it to hold my trend so that I can take these trades. This formation here tells me, listen, I've got a fast SMI on here. It tells me how the candlesticks move. It tells me, hey, listen, if you're right here and you want to go long, it might not be a good idea to buy the high. Why don't you wait for the prior high to be tested as support and then get involved there? That's what these things are telling us. A slow SMI put up here tells me, here's my overall trend of motion. Now what you can see is that is weakening just a little bit here. The one thing that I really want to help you focus on as a trader is the following. Simply because you see the SMI dipping down and weakness is present, it doesn't mean that shorting the high is going to hold as a trending trade. It simply does not mean that. What it does mean is, listen, you probably don't want to buy the highs right there if it's flattening out, and you've got a cross, it's telling you, hey, listen, I've probably just hit my support zones, and so I need to look for that level to tell me where to trade. All the time you're going to be having to figure out what the SMI is telling you, but it is simply a momentum event that gives you undercurrent and it gives you a clue about when to get involved. So one of the big things that someone will say is, hey, listen, I know if I'm above 25 and I've got a slower SMI like here, the 1020, and I'm above 25, I'm probably in an extended trending trade. Where do I take profits? You're going to take profits when the price hits your target. And so this brings us into two kinds of traders. There's a trader who's a buy and hold, and that really is an investor, someone who trades for a long time frame. And there's the trader who cycles in and out of trades into relative highs and comes back at relative lows, or vice versa, if the chart is moving downside. You have to decide what kind of trader you are. For me, I'm a trader that cycles in through relative highs and relative lows. And so if I see my chart breaking out, like it did over this edge on a weekly formation, I can see this motion moving very nicely. Old resistance becomes support. This is dipping down, but this is just telling me I've tested support. This is always going to be behind our motion because it's so slow. As long as I'm holding that region, I can stay in the trade. So you as a trader can look back and say, all right, where was I last month? Where was I, if I am a longer term trader, where was a time that I stayed in the same place for 5 or 6 weeks? That's going to be my major support area. And you can see what it does right here is it comes in, it breaks it, so it'll make us run all our stops, and then it turns around and moves higher again. What I like to do is I like to trade into brand new highs, and as soon as it gets to brand new highs, I'll look backward for about 5 or 6 candlesticks and I'll say, okay, where was my congestion event there? It's right here. So that's going to be a new stop, and that's what I'm going to move it to. When I run the swing trades for the silver membership, that's how I move the stop up. I say, where's their congestion? And let me see how that holds. As it moves upward, I'll go back and I'll say, all right, that's kind of a big move up. So I'm going to look at the high there, and then it's going to move up some more. And I'm going to say, all right, maybe that ought to be my space, that I'd start looking at a space for resistance, and I will allow it to come into resistance. I'm always looking at my support action, because if this is moving upward and I break my moving averages, I am very likely to recapture them at some point if I'm in a moving average, that if I'm in a trade that has a trend that's moving upward. So that's how we look at that. This is from a big time frame. Let's take a look at something like emerging markets. And so, nope, it's not EEMX, but EEM. And instead, we are going to look at, once again, we're going to look at something like a 4-hour chart this time. And I like to look at intraday motion from a 4-hour formation. So this is what we're going to look at. All right, and so I'm going to move that shading. And you're going to see what I have marked here. This is the previous period's range, and I'm looking at a week, right? This is the high, low, and midpoint of the prior weeks, and now I'm looking at the emerging markets, and I'm seeing if this bounce, which I suspected that it would have a tough time with, here's why, right? Here's my daily trend. I have a downward formation. It's been flat here, but I'm still making lower lows and lower highs. And the definition of trend is a series of lower lows and lower highs in sequence. I'm still doing that. So it tells me that any bounces to prior lows, I'm going to run into resistance. And there it sits right there. The real question is, have I hit the bottom of my formation? And so as I'm looking at this, I know that what I have to look at is this chart coming back into the space that doesn't lose its low. That's how I know I'm getting ready to look at a chart that might have a potential bounce event on it. Because a lot of us think to ourselves, holy cow, you know what? This chart's moved like 20% to the downside, and now all of a sudden it's been sitting here for literally weeks, floating around this range. What can I do as a trader to prepare for a potential bounce in this formation? Now we're going to look at our fast SMI, and that fast SMI is saying, hey, listen, I'm way down here and I've inflected over this line. So if I've inflected up over this line, that means, right, that other dashed line is giving me a cross. It's telling me I'm on the hunt for resistance, and that's going to be my prior level that was support. That's how you know it's a good line, because it's got resistance and support looking like the same thing. And so up here, it tells me, oh, I've got this upside pressure, and then all of a sudden it rolls backward, and this backward event is going to give me something else. So here's what you have to do as a trader. You have to wait. You can put an alert here on the space that says, hey, tell me when I come back and I have a higher low. Or you can tell me when I come back and move up above this level, right? I want to see that area. If I can move up above this level, then I move into the next regions that were old support, that became resistance, that became support, that stayed support, that became resistance. Listen, there are a lot of ways to make the market complicated. And there are some very interesting ways to trade in very complicated spaces. For us as traders, we need to make the most simple things the most useful things. And that is what we are looking for here. We're looking for this edge that says, all right, I can lift off of this space. We're going to be able to see that. Notice this. This crosses down, but it's confirming the fact that we've got negative pressure. Right? Remember, this moving up while we're sitting under a moving average simply tells me we're on the hunt for resistance. That's what we're looking for. And resistance here is going to be either old resistance or one of these moving averages. And that's how that's going to sit. When you assess your risk, you can always look to the prior week and say, okay, it's giving me 3 different days to take this short right up here in this space. Where would my stop be? You'd look back to this prior period, which is the weekly previous period range, and you'd say, all right, what is this level? And that level is going to end up being your risk event. Very straightforward, very, very useful. Now let's say, as you're looking at this space, see, everything's relative, folks. When you wait for an inflection like this, what you're actually doing, remember, these things are forward only if momentum is very strong and if it's doing everything it's supposed to. If we pay attention to the signals before it that says, hey, listen, I found myself some support, and you can see that when these things flatten. Hey, I found myself some support. Where might resistance be? Well, the most obvious place resistance is going to be with a moving average that has very little slope is a region close to that moving average. And if you get there, you're going to notice that inflection event turns you right back around. But if you're waiting for the cross, it doesn't really come until the beginning of this candlestick. Instead, if you're looking for that inflection and you're thinking about this moving average, you know, hey, listen, I've got a short setting up here, and I've got a day that it fails, and it comes back up and fails again. So you can actually get in several days before that in that space because you're looking at the prior space. So this one tells you, I'm looking for support. Well, what's that supposed to be? It's supposed to be this level. Does that mean you take a long here? No, not right away you don't, because you're sitting under a moving average, and that moving average has told you that you've got negative pressure. And that negative pressure can always give you a chart that fades and moves to the downside again. You've got to think about these things in a forward fashion, not a backward fashion. The forward fashion says, That's inflecting, so that is my support zone. I am in a negative formation, and so what I have to do is watch my chart fail to head lower. So here it is inflecting. It fails to head lower this way. It bounces into old resistance and then comes back down here and then holds again. So if you're looking for where's my inflection space, you can see that it comes right here. If you hold it and get up and over, the next day you're able to take that long, and it allows you to step into the next spaces of resistance if you're taking a counter trend long. But because the chart is negatively drifting, as soon as it gets into resistance and starts breaking down, you know that you are headed lower. When we look at these spaces, we can use our mechanics all the way down to the 5-minute chart. This is a very noisy place. I do not enjoy looking at trades on this time frame, but I do know a lot of traders have a tendency to look at these very, very tight cycles. Here's how you look at this, all right? You've got your moving average on the day. I like to use something that sort of smoothens out what's going on. But if I gap down in the morning, and we know this is because of chatter for the news, and in my first bounce before the market, I move all the way into the prior day's formations of a high, and then I give it all the way back, what I've done is define the low and high of my trading environment, right? You use your pre-market a lot to do that. A lot of us like to use pre-market action. We call this a Globex high and a Globex low. It means what has the chart done between that time. So here's a little trick. What I like to do is I'll take a simple tool and I will draw a box from the high to the low. Oh, I forgot that I don't use this one here. My high to low here in this space. And then I look at the midline, okay? And that midline event is going to tell me something about price action. It's going to tell me either I hold above it and I get to trade up, or I hold below it and I get to trade down. Now in this case, we can see the chart has moved essentially sideways, and this is what a lot of traders talk about in terms of not having a resolution of price events because there's no resolution below or above. So really, as long as it sits in between this space, what it's telling us is between these quadrants of high and low, right? So this is a fourth, that's a fourth, and then this is a fourth. I'm eyeballing it, of course, but we could draw ourselves a channel for those of us that really like for things to be very precise. The market can be an imprecise place, but we certainly can try to do what we need to. And then let's mark these quadrants. Two lines, let's go to 4 lines, and then show our midline. All right, so what this actually does is measure a move for us. It measures the move up and out, it measures the move in the middle, and it measures the move down. And these are the places that the chart will naturally bounce. What is the SMI telling us? If the SMI is between these numbers, 25 and negative 25, or 30 and negative 30, any place in between those, it means that we do not have a strength of momentum. What we have is the move from support to resistance, back to support, back to resistance, back to support, back to resistance. Now we can see that resistance has stayed here and support has stayed here. These lines look completely different, but support has stayed right where it's at. So you've got to pay attention to price and then use this indicator to help you move through the space of highs to lows. It doesn't mean that if something is not noisy, if something's in a beautiful trend, like the SPX sitting in this space, every time this arrow turns up, because we're sitting in a bullish formation, every time the arrow turns up, we can go long and stay long, right? The downside arrow just says take some profit. Take some profit. That's all it's telling us to do, take some profit. And then when it goes green again, every time you see it red, go take some profit. I got to take some profit. That's really all it's telling you to when it's in a solid trending space. When it's in a mosh pit like this, it's not telling you to stay in one direction at all. As a matter of fact, the chart is telling us, listen, I can buy at support and sell at resistance, and that's all I've got. Even if it pops up over the top, that's not saying anything about what the chart is doing. So how to read this SMI becomes a space of really thinking through what is it telling me in general. What is this chart saying to me in terms of movement? And that is really harder than we want it to be, because we just want somebody to say, hey, listen, tell me where to buy and sell. That really is what we want to do. But we can't. It's not that straightforward. What we can do is say, okay, I know this turned up, and this is my support. So if that's turning up right there, and that's my support, I can take this chart. My stop would have to be right down here, but I could only take it into my frontline resistance because my moving averages are flat. They're essentially telling me I have no strength of motion. All right. That's really what I wanted to share with you in the space about. What I wanted to do is open it up to questions, and really the best kinds of questions are going to be, what about this chart? What's it telling me? What do I need to look for? And that sort of thing. Many of you know that I actually trade in the future space. And so in the future space, I look for things that really are sitting in the same kinds of rhythms that I was talking about right here. But the combination of looking at price and what my trend is gives me a much better sighting of where it is that I'm going to go. So you know that I look for, like today in the futures in 5, we did talk about this 2798 area as attempting to be a frontline support. And you know, if it doesn't, we've got deeper congestion ahead. So if you have questions about anything, absolutely, this is your space to open that up. I don't have one single question. I have, and there are a lot of us in here. So what might you want to know? Luke, what do you think people might want to know in terms of saying, how do I use this space? Folks, I've been trading a really, really long time. A really long time. And the one thing I've noticed through my time trading is that I made things much more difficult than they needed to be. And I had a tendency to use technical indicators as decisioning tools rather than confirmation tools. And so that's really what our technical indicators are, particularly momentum. And so when you look at a space and you're thinking to yourself, what is this chart going to do? You go to your last indicator, you think about, okay, what's my trend? It's flat. My last indicator said down, so I've got to look for support, because that's what it's really telling me. It's telling me that my form has the same shape as it had before. And so if I were looking for something to go, hey, do I want to take this long? And I'm looking at a 5-minute chart here. This chart is saying to me, you know, if you come into this area, you can take a long, and your stop might need to be only 10 cents wide. Now, most of us don't trade on these patterns. Most of us are looking for great big things like, okay, let's take a look at this one. Someone showed me this stock today, and they said, you know, take a look at this thing. It's just gone absolutely bananas. How do you know how to trade something that's just running straight up, right? So let's say you catch it here and you see this space and you see this move up and you go, oh, maybe you catch it here and it's showing this up and you see your slow SMI and it's moving up and you go, oh, that's moving up. I'm going to take it long. And you take it long and you make your stop a little bit too tight. Let's just say you make it a little too tight and it comes into this place and it stops out. See, the key thing is to look at this one and say, okay, I've got upward motion. And so it's telling me I'm looking for resistance. So where is a place that looks like resistance after this arrow? Well, it's like right around here. So what I want to do is look for the formation that tells me, hey, when I come into this area, I want to make sure that it stays as support. Because if it doesn't, it's going to break down. And if it breaks down, it's going to move into its second line of support. And then there's going to be someone that says, you know what, everybody sees this support. I'm just going to try and run some stops so that I can get a better trade to the upside. When we are in a runaway train like this, a lot of times we have no idea how to sit in the chart. And so we'll say to ourselves, oh my gosh, I really want to go long, but man, I don't know where my support is. You draw a trend line. When it gets to support, you go back to the last SMI indicator that you have and you go, okay, what is this telling me? Well, this told me I need to look for frontline support. That's my trend line right there. If it holds that edge, I'm going to take a long and then my SMI is going to tell me I'm going in the right direction. That's what we're supposed to do. Not the way we normally do it. We go backwards and we go, what is this telling me? I need to look for support. That's my support edge. I can take my long there, and then my SMI tells me I'm going in the right direction. I can follow that SMI up as long as I want to, but what I need to look at is I need to remember that this arrow is always telling me I'm on the hunt for resistance. If that arrow is up, it says I'm on the hunt for resistance. So that makes a resistance zone, and this makes a resistance zone right over here. And this makes a resistance zone. All of these regions. If I come into this area and I start looking, okay, that's my high, and I start looking at this area right here, all of a sudden that's support. The second my support gets broken, that's old resistance, building as new support. The second it gets broken, I need to think about trimming my gains. Doesn't mean that I can't get back in. Right? You can look at your prior week's high. I love looking at that space. But these are the elemental things that are not high tech, that are not overly heady, that will keep you on the right side of a trade. What we have a tendency to do is a snatch and grab approach when we're looking at stocks. And thank you, Luke, for offering that space. Oh, this is perfect. Sometimes the SMIs on a weekly or daily will conflict with the signals on a 4-hour. How does one make sense of conflicting signals because of different time frames? The question boils down to this. At some juncture, you're going to be taking a trade that follows a particular time frame. The time frame that your trade follows. How long do I want to keep it in here? Do I want to keep it in here during the day? You better look at where is your support, and you look at tighter time frames to help you figure out what's going on. Your longer time frames will tell you what's going on if you hang on to the chart. Again, this is only if it recovers. So for instance, here is our slow SMI. It's the one that tells us as long as we're sitting above that 0 line, what we have is a bullish formation in general. And when we pull back, we're testing support zones. So when we look at that space and it comes in and it tests a support zone, we want to see support here. If we lose support and this still stays up here, our chart needs to quickly recapture support or it's going to change direction. So if you're looking at a 4-hour chart, let's say this one that is rotating down here, and then I move this to a daily chart, and I see this is an IPO, a Canadian IPO, and so we look at this chart, we can see not a lot of everything, but that is very, very bullish, right? So you want to make sure that the direction you're trading is not dramatically against anything that you're seeing, right? So if your SMIs are disagreeing, one is moving up, one is moving down, but all of your moving averages are moving up, you better not be taking a short trade for any more than a couple hours at the most, because it's going to turn right around, hold support, and move back to the upside. That's as simple as it gets. If you are looking at a 4-hour formation and all of a sudden it's got all kinds of wiggles in it, again, your trend tells you what to do. If you decide to short, you can only short into the support hunt because that's all this is telling you, right? So this right here, if you're looking at this trade right here, right now, it's got a topping formation. That means resistance is showing up here. And frankly, this chart has moved from $20 to $120 in a little bit over a month. A couple of months, maybe? So yeah, of course, it's the cannabis bandwagon. And that's why someone showed it to me as, just, hey, wouldn't it be great to have 5,000 shares in that? Yeah, sure. If, you had a crystal ball. The question is, if you're interested in these kinds of things, you draw the line, you watch your support, and you move it into where it is that it's going. Right here, this chart has told us I'm on the hunt for support. Right here, you can see that it came to support. That was old resistance. It held that level, and now it's moving up. So what do we do now? We know it's moving up. It's going to have itself some kind of upward motion if it continues to move up. But right now, it's not doing that. We don't have an up arrow. So if you're looking at this and you're saying, oh, wow, that's my support zone, I could have gone long here or long here, it doesn't tell you you can go long here. Because this is saying, hey, I'm coming into resistance. So if you did take a long because you were looking at this edge and it brought you into something that looks like support, you would have to take profit here because that is a prior congestion zone. This is a prior high from last week. It has not gotten there in general. We are looking at motion that says, hey, I'm going to pull back into my next line of support. It could be here. It could be here. Of course, I like them here. So if I were looking at this trade and I said, hey, this looks like I could have a short, I would know that if I could get my short up here at 121, I would need to have a stop that's at least $4 wide. I can't take it here as a short because everybody else has been buying here. That's old resistance, new support. So you wait for your arrow. Your arrow says, hey, listen, I'm looking for a resistance zone. That resistance is going to become support. That's going to give you your trade action event continuing in the space unless you were looking at this one that said, hey, I'm coming into support. This action gives you your entry space. When your arrow comes in, old resistance becomes new support. That's your continuation space. All right? So hopefully I did not make things too difficult in your space. I want you to understand that trading means running a mechanical motion over and over again. And the only way you can do that is by putting yourself a process of steps in place that will allow you to use something like an SMI to get you in the right trade. So if you say, all right, the first thing I'm going to look for is an inflection zone and an arrow to show up. If that arrow shows up, it tells me, all right, I'm on the hunt for support. If you want to trade into that support, you want to look at the first area of support. There's the arrow. Here's my first area of support. I lose it, I bounce, and then I lose it again. That's my continuation trade. I can watch it come into my second area of support. But because it's a bullish trend, I have to get out. I've got to get out. After a couple of support tests in a bullish formation, my chart is going to bounce. And if it bounces, It's literally very likely to come back into the place where you got into the trade. And I know most of us can say, you know what, I've had a trade happen to me just like that. I had good profit, it started bouncing, and it went right into where it is that I got in, and then it turned around and started moving in the opposite direction. And that's probably because you were trying to pick a top or trying to pick a bottom, and it just did not come in that same way. All right, that's it for me. Spent an hour with you folks. If you have individual questions, please give me a jingle. If you want to learn more, I'll be in Torrance with Metastock in October. I'll be in Las Vegas in November. And of course, all the other times I'm either on the road doing something fun or sitting here at my desk. So reach out to me anytime. I'll be happy to answer your questions. Thank you for spending precious time with me. I do appreciate it. And each of you will get a recording. Fast forward it to the sections that you went, wait, what was she saying there? And if you don't get it, write me a note and say, you said, and that's not what happened, and allow me to fill in those gaps for you. You'll be really happy that you did. It'll be good. All right. Thanks a lot, folks. Take care.